Good morning, everybody. I'm Ed Parcaut here with Real Estate Jerky Daily. Mike Kelly's feeling under the weather today, so reach out to him on Facebook. Tell him how much you care about him. Tell him to get better. He'll be hopefully back next week. I just think he wanted a day off and act like he was sick. He called me, I'm sick. I can't come in today. You know how everybody does when they call him sick. I'm kidding. He just texts me. Anyway, not a ton of news today because it's Friday and we're still got the government shut down. The Dow's up 32 basis points or 32 points. The rates have gotten 6 basis points worse so far, but the 10-year is still going down. It's at 4.0011. And so that means rates are going to continue to get better over time. That's and Lacy Hunt is he was talking about what he sees out there right now in the inflation and what's going on. And he sees that capacity utilization is declining, which is a deflationary signal. The rise of AI is helping this amplify this trend because you're more productive. Liquidity is back to pre-pandemic levels, similar to those seen just before 2019 repo crisis. The Fed may need to stop its balance sheet runoff because the liquidity as it runs it off, it's shrinking that. Well, they're going to have to start buying here soon. Bankruptcy, delinquencies, and failing credit scores are on the rise, especially among regional banks like Zions and Western Alliance. What does that mean? That means that we're probably going to start seeing they put out kind of a target zone. They kind of see what's going to happen with the bond. I just said it was at 4.00. They're thinking the next step is 3.91, then the 3.8, 3.67, and possibly as low as 3.60, which I could see that going forward. It's just going to depend on November when the tariff thing is going through, because that tariff thing gets denied and the Supreme Court says President Trump didn't have the right to it. It's going to destroy the economy even more. And I don't mean that like, oh, the sky is falling. I just mean because of the fact of if it goes through, then I think we're going to have a booming economy and we're going to not see, so the booming economy will cause to have more income, more this, and we're not going to see the doom and gloom. And it's just going to not lower rates anymore because when you have such a great boom, there's no need to lower the rates. However, if you looked at where the deficit is right now, it keeps going down because of the tariff money. So that's why the whole question is if that's going to go through or not. So we'll know that in November. There's only a couple weeks away. That's shocking. It's so already almost an end of the year. What else next? So next week you got a little bit of numbers coming out next week. I just want to Wednesday a mortgage application, 20-year bond auction, Thursday existing home sales, Friday CPI inflation report. That's the consumer price index. They had to get it out because they need to use it for Social Security COLA updates, and that's why they had to get that out. I know I'm forgetting something. I knew there wasn't a lot today, but there was we already talked about Fed cutting. Everybody thinks for sure they're going to cut in October because of what's going on. But be careful out there. Real estate fraud is on the rise. There was a case out of Cleveland regarding real estate fraud. A woman discovered that her late mother's home was sold during a forged quitclaim deed. More than a decade after her death, the notary listed on the document denied involvement and provided evidence that the deed was forged. So the people because the person was already passed away at the time. If you look at NAR's 2025 survey shows 63% of markets reported deed title fraud cases in the past year. The Northeast saw 92% of reported fraud. Most scams target vacant land and non-owner occupied homes. So be careful there. If your house is paid off, put a loan on it and they won't be stealing your house. As fraud detection becomes a national priority, the case reminds us deed protection services and title vigilance are more important than ever. And we go back to what I said earlier this week with the title companies. You want to stay relevant, you should probably offer a protection after you do your loan for them, not loan, but once that loan's done or they buy the house and the title policies on there, maybe offer a yearly protection plan. Then you stay relevant and you stay in that whole mix. And then you could actually do where you just, for a certain dollar amount every year, every time you refinance, you don't have to pay the fees. That would be an amazing job, wouldn't it? Come on, let's think about these things. FHFA has a proposed 2026 through 2030 strategic plan. I can't say anything today. It signals a sharp pivot under the new Trump era leadership. Fraud detection and deregulation are the new focus. Previous DEI and language and equity language has been removed from everything. New tools include AI-powered fraud detection and partnerships with Plantera Technologies. The plan supports housing growth, and particularly through the GSE support of low-income housing tax credits. They're looking for public comments about what their plan is, so go check it out and get back to them by November 5th what you think about it. And there was they're saying to start using arms. I just don't like arms. I don't think the arms are for what you get out of them. I just saw too many people lose too much stuff in 2006 because of the arm they were put into or something else. I'm just not real big component of it. I know a lot of people like them. I don't. I prefer have a fixed rate, never have to worry about it. If you're only going to stay there a short period of time, fine, but 9 times out of 10, you extend it. Um, According to if you're in the mortgage industry this week at Sales Mastery in Dallas, I was going to go, but I went to Growth Hacking Live. And from then I've been so busy doing all the stuff I'm doing, plus my normal job. They're talking about there needs to be a new leadership trend, embedded coaching cultures. They need to do more for them. If you ever were in the loan officer industry years ago, you got in, you figured it all out on your own. Now we always didn't like that model. You need to have people helping you along the way. Accountability in your dashboard, in the moment feedback post versus post moratorium reviews. Move away from old school figurehead managers. They want you more involved. I can see that, because it's a totally different world, totally different people. It's not Glenn Ross situation where that's where we were at. It's not that way anymore. And that's really all I have for today. I really stretched it to get to this, but basically the market is improving for rates overall. And just because of the premium that's built in has been going down too. I read somewhere else it's closer to the twos, getting closer to where we want it to be, and eventually that get back to where it's supposed to be at 1.6 to 1.7. Anyway, if you don't understand that, just reach out to me and I'll talk to you personally about it. All right, if we were talking about refinance, stop waiting. Now would be the time. You can always redo it again, but if you save $250 right now, but you're waiting for the lowest, which might take 6 months to a year, you just lost that almost $3,000. And how long will it take you to pay yourself back? Into the additional savings that you're going to occur. Say you saved another $50. Well, what's 2,500 divided by $50? That's a few months. So I do it now, and you can always do it again, especially if they go with somebody like myself that we don't have the underwriting fees and the title escrow fees, those kind of things. We only have to set up your new impound account and then some other costs. We'll just look at the numbers, tell you what it is. And there's other people like me out there that do the same thing. So just get it done now and stop waiting. All right, everybody, make it a great day. We'll be back on Monday, and we'll be making up the news at that time. When Mike gets back on Monday, he'll talk about the California numbers for you. All right, make it a great day, and we'll talk to you on Monday. Have a great weekend. And we're still going to do radio on Saturday. So if you want to listen to us on Saturday at 12 noon on 1360 KFIV, replays Sunday at 3 p.m., and then it's uploaded as a podcast on Monday. All right, make it a great day and have a great weekend. Bye.